The Reserve Bank sets the official cash rate once every 6 weeks or 7 times a year. The OCR is a powerful signal that the bank uses to dial up or down the cost of money, that is, interest rates, that people and businesses pay when borrowing for everything from houses to cars to credit card purchases, or that they receive on their savings. These interest rates altogether affect the rate of consumer price inflation and the level of activity in the economy. The Reserve Bank's aim is to keep prices stable. If the economy overheats, higher interest rates can discourage excessive borrowing and spending and encourage saving, which helps to keep a lid on inflation. If the economy slows too much, lower interest rates can encourage the borrowing and investment the economy needs to grow. The Reserve Bank makes OCR announcements at exactly the same time each time, 9 a.m. on the dot. Financial markets react immediately, but the effects go well beyond that. The OCR sets the overnight rate for banks. Say the OCR is 3%, the banks will charge their customers 3% plus a premium that's set by the market. The important thing to understand is that when the OCR changes, banks may change their lending and deposit rates too. And this spreads out over time from the major financial institutions to the retail market for businesses and households. Interest rates affect the decisions that we all make about saving, lending, and borrowing money. For a 20-year house mortgage, a buyer's decision is affected by the interest rate today, but also by the rates they expect to see down the line. Trimming interest rates in New Zealand reduces demand for the Kiwi dollar. A lower Kiwi dollar means we pay more for the goods we import. This raises the prices of the everyday goods we import, like cars and electronics. But our exports become cheaper for overseas buyers, which encourages exporters to grow their businesses. The OCR also affects what each of us does with our money, whether we decide to buy, or borrow, or save. If interest rates are low, people may renovate their homes. They may spend more and be less inclined to save. And if lots of us are spending more, businesses feel confident about producing more and investing in new technology and machinery to meet the extra demand. But as businesses work hard to produce more, there is more pressure on the limited resources in the economy. This pressure drives up prices, and the cost of everything from people's labour to the price of raw materials goes up. A few weeks before the next OCR, market chatter will grow about what the Reserve Bank will do. The OCR announcement goes out, financial markets react, and so the cycle begins again.